I'm very excited to be your host today. This seminar is providing educational information from subject matter experts who hold knowledge critical to their field. If you are a first-time home buyer or downsizing, this is an amazing opportunity to ask questions before applying for a loan. It is with great pleasure to introduce our speaker who has been in the industry for 20 plus years. Currently a manager of the ABNB Mortgage Department, offers an array of experience and expertise to share with us. Today, I'm very proud to announce our guest speaker, Alfred Howard Jr.
Welcome, everyone. Thank you for joining us today, and we're going to give some basic information on what you need to do to purchase a home. How does the home buying process work? First of all, you want to define your needs. You want to get pre-qualified. Look at what you want to buy, what you need. Most people look at school districts and things like that, crime rates. So you need to get pre-approved. You need to choose a real estate agent. They will help you find the house. And you're going to go through a purchase contract. You'll look at it. Next, you do a home inspection. Now, that is not mandatory, but if you're going to buy something, it would be like if you're buying a car, you want to take it to your mechanic to have them look at it. Then the house will be appraised, because you don't want to end up, let's say, you're going to pay $150,000 for a house, and the house will only appraise at $100,000. So now you're paying too much money for the house. After you get the appraisal done, you want to get a home warranty set up. Look at prices for that. Most people aren't prepared for unexpected repairs to a home. Most are coming from renting, so you just call someone to rent. There's some things that will happen prior to you closing. Your documents will be sent, and then you go to settlement. Okay, that's just a quick breakdown of how the whole process will go. There are some benefits of home ownership. There's credit benefits. You also are going to increase what you purchase a house for is going to increase in value. So you have independence. And we think about that as we move forward, because as you go into retirement, you're going to need that housing expense to go away. You build equity with each payment that you make. And there's a sense of pride and security because it's your house, stability. And of course, as you make payments in it, you're building equity. So you're going to gain money. And of course, there are tax advantages because you can write off your interest. That's a little bit, talk to your tax advisor. There's legislation that may change on that. Here's the breakdown, shows you the comparison of what you're paying in rent and how will it increase and how much money. A lot of times we don't realize how much money we pay in rent, and look at a 5-year period. As rent goes up, you've paid almost $100,000. You have to see how, and this is just some information saying how you will gain at the rate of inflation. Of course, you save money because of the tax deduction that you can have, state income tax deduction for interest and federal taxes. Now, here are some things that you want to know. How much payment can you afford? What type of dwelling are you looking for? How long do I want to be in the home? What school system do I want for my family? New construction versus existing homes. New construction is on a very low end right now. What you want to do is you want to set out a budget. If you guys want to contact me directly, I have some good worksheets that I could give you that could set your budget up. And so you can look at all the things you would qualify for. When you go into the process, keep yourself as organized as possible. Look at what your current rent is. How much money do you have down? When you're purchasing a house right now in this market, sellers are not paying the closing costs. And there you're looking at about 3% of the asking price as closing costs. Also, you want to work on your credit. Get it as best as possible. Put on your Sunday best when it comes to your credit, okay? Because it's a long-term commitment. What you want to do is get pre-approved. You can get pre-approved at any time. At least you want to know where you stand. Any of my loan officers can get you pre-approved. Doesn't take long at all. Probably takes about an hour, depending on how complicated your situation is and what you need to build on to make your credit and get yourself a favorable home buying process. determining how much you can qualify for. There are some programs, but a good rule of thumb is take your gross income. You can look at your W-2s, divide that by 12, then use 43% of that gross monthly income. And then take your bills, all the credit card bills, and subtract that. The difference is what you will qualify for. So your total cash outlay can only be 43% of your gross income before taxes. Your credit is very important. There are a couple of ways that your credit scores are scored. Your higher credit score, if you have a $1,000 limit on a credit card, you want to keep that balance below 30%. So that $1,000 high credit limit credit card should only have a balance of $300. It also goes on longevity of accounts. So if you have an account that you've had for a long time and you finally paid it off, do not close that account. Keep that account active because that's how you build your credit score. A mortgage score is going to grade you at 740 and above. Mortgages are scored a little different, and we can go into that if you want to have a one-on-one conversation about that. The lower your credit score, you're going to have to come up with more money. So the higher your credit score, the less money you're going to be required to put down. And you're going to get the best interest rate so you can qualify for the most house with the lowest interest rate. When mortgages pulled, they're pulled by all three credit bureaus, and there are Experian, TransUnion, and Equifax. This is a breakdown of how your credit is actually scored. Types of payment history, length of credit history, new credit, types of credit used, and amounts owed. Basically, this is more information on how and the importance of your credit reporting. Basic elements of how much money do you make, what's your credit score, how much are you putting down. Always remember those are the basic elements of home buying process. You can always get a copy of your credit report from each bureau. You have 3 repositories, so you can contact them all and get copies of it. Now everybody has Credit Karma and things like that, so there are many different places where you can see your credit report. And you want to look at it all because you want to make sure that there is nothing on your credit report that is going to negatively impact you. How much do you need for a down payment? That's going to vary depending on your credit profile. FHA programs, you're looking at 3.5%. Some you can go conventional with 3%. And there are some programs where you can receive grants for your down payment. Closing costs. Typically, closing costs would be 3 and 7% of the purchase price. So when you purchase it, there are a lot of people who have to get paid. The city has to record it. There are taxes, just like when you purchase anything. There are city taxes, state taxes. So they collect that money up front, and those are being dispersed at closing. There are some programs like VA, if you're VA eligible, that you can roll those costs into the loan. And some instances where the seller will pay for it. These are some of the basic types of loans that you can do. They have limits to them, conforming loans. If you're looking at 548, once you go above that, it gets into a different pricing. There are ARMs, there are FHA mortgages, VA, USDA. USDA will help you get rural housing. One that we're trying to get now is VHDA. VHDA will allow you 100% financing. You still will have to come up with your closing costs if the seller is not going to pay for it. These are some of the terms that we'll get into loan to value. Whenever you go to purchase a house, if you purchase it for $100,000, that's going to be the loan to value. They're going to assume that it's going to come in at that price. This typically comes in when you go to refinance your property. Once you've been in it and you purchased the house for $75,000, but now the house is worth $100,000. Now you have a 75% loan to value. Debt to income ratio. You want to reduce your bills, your credit cards, your car payments. Biggest impact to debt ratio are car payments. The average car payment, you're looking at $300. $300 on a car payment is a difference of close to $50,000 in house with the elimination of a car payment. So that's very important to reduce your debt so you can qualify for a house. These are just more indications of ratios. What is your mortgage payment to your income? How does that work? And we can get into this later. These are examples of how your ratios work, how much money you have coming in versus what's going out. So your mortgage payment is $1,500. You have other payments of $390 for a total of $1,890. That is divided by your income, $4,500 a month, brings you to 42%. What you want to do is work with a credit union. Okay, there are a couple of rules in this. Typically, when you go to a realtor, realtors want to send you to their lender. By law, you can use any person that you want, that you feel comfortable with, to solidify your mortgage. Susie Wilson, real estate agent, she says, hey, I want you to go to this guy. And you say, I'm better suited going with my credit union. By law, they can't tell you to do that. Get pre-qualified with someone that you're comfortable with. Typical agents make 3%, selling agent and for the listing agent. This is the MLS listing service. This is what your agent will look at the houses and it will give you all the breakdown. Pretty much this is the same thing like Zillow does, except for MLS listings usually operate in real time. Zillow and Trulia and all those places, that information can get a little stale, may not be available. The house you see on Zillow today may have already been under contract and gone. Always remember, no house is perfect. I highly recommend if you find a house and that you get a good home inspection on it, because that is going to keep you from losing a lot of money. It may look nice on the outside, but a home inspector is a professional that will go in and look at things that you wouldn't think to look at. I can tell you my first house, and there's no way that it could happen, but my heat pump went out in my first house within 90 days of owning that house. And that cost me many years ago. It cost me like $1,000, 90 days into my purchase of my first house. So get a home inspector and pay good money for it. Right now, it's a very competitive market. So you want to be as qualified as you can before you get into it. You don't want surprises. So it's best that you work with a loan officer, get qualified. If you're not there, they can put you on the path to where you need to be. There's pre-qualified and then there's pre-approved. Pre-approval means that we've taken all of your information, we've looked at it, we've analyzed your bank statements, your W-2s, everything, and we said you qualify for X amount of dollars. When you go to negotiate on a house that you're looking for, you're going to look better than the person who is just pre-qualified, because we've basically said we've dotted the I's and crossed the T's. This person is qualified to purchase this house. Then that way you can negotiate your contract a little better. Again, reiterate the home inspection is very important. You do not want to purchase a house and start putting a lot of money in it. We've all heard the tales of someone purchasing a used car and the transmission goes out. That's not that fun when you purchase a house. Here's where you want to organize yourself as best as possible. Most of us now are computer savvy and our bank statements and things like that are all done electronically. Help the loan officer out by having all that stuff readily available. Get your pay stubs together. Get your bank statements together. Keep them in one clear, concise package for them so that they can submit your loan documentation and your loan will go through the process a lot easier so that they don't have to continue to ask you for information. If you are in the process, and let's say you just started a week ago, when you get paid, send a copy of your most recent pay stub to your loan officer so that they will have that, because you don't want an underwriter asking for additional information. So help the loan officer help you. Get copies of all money. If you're going to receive gift funds, please inform the person who's going to give you some money that they're going to need a copy of their bank statement as well. They will say, I'm not applying for the loan, but the lender needs to know do they have the money to actually give you? And then you're going to get copies of your contract. And another thing that I like to mention, there's this thing when you go to close, there's seller's title and insurance. It is optional, but that will prevent if there are any, let's say you purchase a house from siblings that someone passed away, people inherited the house. That will protect you against any unforeseen liens that came prior to you purchasing the house, because they will still stay intact. So now you have insurance. So I highly recommend owner's title policy, definitely flood insurance and things like that. In the loan process, the property has to be appraised. They're going to have to do a title search on it and title insurance, things like that. So you have to keep title insurance. That's how ownership is transferred from person to person. Alfred Howard sells your property. You have to get title insurance to protect yourself. At the end, they're going to give you information on what you have to bring to the closing. That's going to have to be in the form of a cashier's check. Now also you can have that wired directly to the settlement agent or attorney. And make sure you bring a copy of your driver's license or some identity. We have a pretty fast process here at the credit union. My loan officers are very thorough. They tell you exactly what pitfalls are going to come across. We do it every day. We look for things. It's not a hard process. It's a tedious process, but it's not a hard process. The questions, my loan officers are readily available. Let's get you guys pre-approved and see where we are in the process. Okay, so let's go with the questions.
Okay, Alfred, Sandra has a question for you. What is the difference between buying new and one that was built years ago?
Good question. The process is really no different. It becomes a personal opinion. Sometimes buying new, builders sometimes want to give you incentives to purchase new. If you get a home inspection, even buying new, I would still recommend a home inspection because the process is no different, just personal preference in my opinion.
Nyla has a question. If you are purchasing a home with the sale of your current home, could you obtain a mortgage based on the value of the current home?
Yes, underwriting, and it can vary from lender to lender. Some lenders will have it where you have to sell your house prior to you closing on your new house. Your existing home would have to go to settlement first.
Next question is from Erica. Is the title insurance in absolute sense once purchase a home, and if you incur bad debt afterwards, a lien is placed on your assets?
When you're doing a purchase, you want to do it because it protects anything that was on title prior to you purchasing the home. I just came across an attorney in North Carolina, first time we're doing a refinance, and he suggests that you do title insurance every time you make a real estate transaction on your home. Never heard that before, but it kind of made sense in what he was saying. I guess I had to lean on him because he's an attorney and I'm not. In the beginning, when you purchase a home, I highly recommend. It's not that expensive and it protects you. Any more questions after this, email the mortgage department at mortgages@abnb.org.
That's wonderful. Thank you for that information, Alfred. It was a pleasure to have you with us today. I would like to cover financial education topics that are of interest to you. Please email jhansbarger@abnb.org. Have a good evening.